The NASDAQ market is currently closed. The following analysis is based on the market close from November 5th, 2025. We are looking at ticker symbol MTC, MMTec Inc., which closed yesterday, November 5th, 2025, at a price of $2.21. That is not a typo. The stock finished the session up $1.91, a gain of 627% on the day. The volume was an absolutely staggering 337.98 million shares. This is not the kind of trading you see in a healthy, stable company. This is the kind of explosive, frantic activity that signals a complete detachment from reality. And your first thought upon seeing a 627% gain is probably to wonder what incredible news was released. What world-changing product did this tiny company announce? The immediate assumption, the expectation, is that this must be a massive opportunity, a ground floor entry. But the reality is that MTC was and is a company on the brink of being kicked off the NASDAQ exchange entirely. The expectation is opportunity. The reality, in this case, is a 337 million share speculative frenzy, a gamble of massive proportions on a stock that was scheduled for suspension. Let's be perfectly clear about what MMTC Inc. is and what it is not. The common narrative, for the few who even followed this stock, was that it was a dead end. This is a Beijing-based holding company that provides financial technology, trading support systems, and market data. The fundamentals are, to put it kindly, abysmal. The company has negative earnings per share of over $4. Its fundamental rating from analysts is a 2 out of 10. This is a microcap stock that has been in a long-term decline. In fact, the company had to perform a 1-for-8 reverse stock split back in December 2024 just to get its price back over $1 and maintain compliance. That compliance, however, failed. On October 27, 2025, NASDAQ sent MTC a formal delisting determination letter. The company had failed to maintain the $1 minimum bid price for 30 consecutive days, and because of its prior reverse split, it was not eligible for the usual 180-day cure period. The exchange stated that trading would be suspended at the open of business on November 5, 2025, yesterday, unless the company requested an appeal by November 3rd. So the expectation for MTC was zero. It was a flatline. The expectation was a quiet delisting, a fade into the obscurity of the over-the-counter pink sheets, and a total loss for anyone still holding. But yesterday, November 5th, the day the axe was supposed to fall, the stock did not get suspended. Instead, it opened at 31 cents and ran to a high of $2.21, closing at that high on volume that is almost beyond comprehension. Let's put 337 million shares in perspective. The entire float of MTC is only around 25 million shares. This means the entire public float of the company turned over, bought and sold more than 13 times in a single trading session. This is not investing. This is a signal of a massive and likely retail-driven, speculative event. This wasn't institutions building long-term positions in their Fidelity wealth management accounts. This was a swarm. This is the kind of activity you see when a stock with a tiny float, a delisting notice, and a high degree of chatter on social forums gets targeted. It's almost certain that platforms like the Robinhood app and SoFi Invest saw a massive influx of users trying to trade MTC, drawn in by the parabolic percentage gain. This is the absolute opposite of a stable investment. It is the antithesis of what a service like Schwab Intelligent Portfolios is designed to do. An intelligent portfolio is built to avoid this kind of volatility, to provide a steady path. This MTC trade was a rocket ship fueled by pure speculation with a very high chance of exploding. We have to ask what caused this. The most likely scenario is a combination of two things: a short squeeze and news of an appeal. The delisting was scheduled for November 5th, unless an appeal was filed. The fact that the stock traded at all and wasn't suspended strongly implies the company filed its appeal by the November 3rd deadline. This appeal would grant a temporary stay of suspension, pending a hearing. This news, however minor, combined with a 25 million share float and a history of being a target for short sellers, creates a perfect storm. It's highly probable that many traders, perhaps using sophisticated platforms like interactive brokers, were short this stock, betting on its seemingly certain delisting. When the stock didn't get delisted and instead started to move up, those short positions would have been forced to cover, to buy back shares at any price to cut their losses. In a low-float stock, this forced buying creates a feedback loop. Retail traders on their Robinhood cash management accounts see the momentum, they pile in using fractional shares to get a piece of the action. The price spikes, forcing more shorts to cover, which spikes the price further. This isn't the kind of volume you see in Apple stock on a normal day. This is a structural market dislocation. This isn't the steady, product cycle-driven volume of Tesla stock or the sector-defining movement of NVIDIA stock. This is a micro-cap fever dream. So what does MMTC Inc. actually do? When you strip away the 627% gain, what is the business? It's a holding company for a few subsidiaries like Future and HC Securities. They provide market data services, consulting, and trading system solutions, primarily in China. Think of it as a small-scale provider of the financial plumbing that larger institutions use. The company has a tiny handful of employees and revenue that is completely dwarfed by its operating losses. This is not a high-growth, innovative tech firm. This is not a company that is going to change the way online investing is done. This is a services firm that has failed to gain traction and has been struggling for years. The disconnect between the business, a 2 out of 10 fundamental story, and the stock's one-day performance is one of the widest gaps I have ever seen. It's a stark reminder that in the short term, the market is not a weighing machine, it's a voting machine. And yesterday, 337 million votes were cast in a frenzy of speculation. Now, we have to look at the future outlook. This is where the expectation versus reality frame is most critical. The expectation for those buying at $2.21 is that this is the next great meme stock, that it will go to the moon. But the reality is that this is an incredibly dangerous position to hold. The single most important catalyst for MTC is not its earnings, not its products, not its management. It is the decision of the NASDAQ hearings panel. If the company is successful in its appeal and outlines a credible plan to regain compliance, which is a very high bar to clear, the stock might stabilize and avoid the pink sheets. This would be the bull case, and it's a thin one. The much more probable bear case, the overwhelming reality, is that the panel will uphold the delisting determination. The company has already done a reverse split. Its losses are substantial. There is very little reason for NASDAQ to grant an exception. Once that final delisting order comes, the stock will be removed. The volume will dry up instantly. The liquidity will vanish. Anyone holding shares in their individual brokerage account, whether at Fidelity or SoFi, will find it incredibly difficult to sell. The price will almost certainly collapse back to the pennies from which it came. This is not a situation where you look for investment help. This is not a stock for self-investing in any long-term sense. This is a gamble, pure and simple. The professionals on the Interactive Brokers trading platform are likely all gone. The shorts are either covered or blown out, and the longs took their one-day profit. What's left is a game of musical chairs. Anyone looking at the Fidelity mobile app and thinking of buying MTC today is bringing a knife to a gunfight. The big money has already moved on. Even the institutional holders are basically non-existent. We're talking less than 0.5% of the company owned by institutions like Citadel, and their positions are minuscule. This is not an institutionally owned stock. So, to summarize what we've seen with MTC, the expectation based on its fundamentals was a quiet death. The reality was one of the most violent, high-volume, and speculative price spikes of the entire year, completely and utterly detached from the underlying business. This was a market structure event, a low-float squeeze, a delisting gamble that created a one-day supernova. The expectation of new buyers is that this supernova will become a sun. The reality is that it's far more likely to be a black hole. This is the wild side of online investment, and it's a perfect example of how a stock's price and a company's value